Welcome back, everybody, all my traders, to another episode of the Bison Trading Show, where we break down your most favorite pairs and some of the most good pairs in cryptos and the financial markets that's moving up and down. We're trying to jump in and tell you all about it. But I'm not here by myself. I'm only one half of the Bison Trading Show, and I go by the name of I'm the D Guy, aka Pro Financial. But you already know who I'm here with.
Yes, sir. What's going on, good people? It's your guy, Top Trades Futures, here for another episode of live market analysis. Ready to break down these charts for you guys and give you some good information for tomorrow's live trading session. So, without further ado, let's get right into it.
All right, so I'm just gonna hop right on into my two favorite pairs, AU and GJ. I like to stay with them because, like I told you, once you get one pair and master them, you'll be an unstoppable trader. So for me, I just try to master AU and GJ. So let's start with AU. Righty. All right, so like today's Thursday, nothing too much has really changed, but we want to see ultimately what has the market done since Tuesday. So let's go to my monthly. Even though monthly is a monthly candle, each candle is a month. We just want to make sure nothing is tricked our eyes, nothing has moved. I think my screen on my joint is frozen a little bit. Give my computer some time. It's spinning, which means it's frozen.
We tell you guys all the time, patience is important.
Yeah, spirit will. That's God. Let me just. Okay. All right, here we go. Now we on the monthly. So like we said, on the monthly, we're just trying to make sure lower lows are still there. The 7 is below the 65, and everything is still there. So let's go right on to the weekly. The weekly, same thing. The each candle is a worth a week, so we're still in this week candle. Nothing has changed. The only difference is now we can see what has changed since Thursday on our lower time frame. So let's hop right on down to the daily. The daily kind of really, for me, is really your starting point when it's time to make your entries and exits. Just because by the time you have gotten down to the daily, you should have decided what you're going to do, whether you're going to buy or sell or just stay to the side. At least for me, it doesn't look like too much has really um, changed. Let's drop down to the 4 hour. So I think the last time we might have been somewhere. Where's Thursday? Thursday was 9/7/27, was right down here. So we were down at a low. I think we said we were looking at for higher highs and higher lows. I think we said that either two things were going to happen: either that the market was still retracing, and it had the pullback hasn't finished, and then it's going to continue in its down direction, or ultimately it's on its way of a reversal going the other way, which is up. So I think for me, I think the market has possibly shown us that it is now moving in down direction. Let's drop down to the 2 hour. But I still in that consolidation area I was talking about before, between the 78 and the 76, where it's just kind of really just been up and down, up and down. We kind of try to corner the market, so to say, by putting an area right here at the 77, or 77 and 75. No, 75 or 75. 75 is all the way down there. But okay, 77. Um, for me, I just wanted to see that when the market is consolidating, is it consolidating and then moving up towards the up way, or is it consolidating and pushing down? So for me, it just looks like the market has found some resistance at 77.5, and I can see the market just kind of still playing to the side. But until we get the break of the 78 up here and making higher highs, is probably the best time to hop in for the buy. It hasn't really made any higher highs or higher lows. It's just kind of really, it's come. So before it was between the 78 and the 77. Now the market is between the 77 and the 78. So we try to corner the market and see which way. So it can just be playing up and down. we can be as safe traders and just like, all right, since it's found resistance down here and it's in a consolidation area and it stayed above this zone, we can just safe to say that the market is heading back to the top. And I feel like as the sellers, this could be a good opportunity for us because we found resistance at 77.6. It is looked like the market is now breaking over the 7. If we can get the market to kind of break over this high over here to the left, which was once a high before all of this happened, I think we can bring the market at least back up to 78. Let me see how many pips it is from where we are into the top. Not that much. Good 725, 25 to 30 pips. I'll take that any day of the week. But the only thing that kind of worries me is that on the highest time frame we are in a monthly, and that I don't want to fight the trend, but also on all the lower time frames, lower than the daily, like the 4 hour, the 3 hour, the 2 hour, it's really just been kind of consolidating up. And when I say consolidating up, it consolidates and then it shoots up and then it consolidates. And then the next thing we should see is another shoot up and then a consolidate. So I think I would stay on the buyer side with this one. I really wouldn't advise a selling. And if I did advise a selling, being hard headed, it wouldn't be for much. It would just be back down to this area of the 77.5. Let me see how many pips it is from where we are to the bottom. About a good 20, 23 pips. And that's probably like a 1-to-1 because we're taking it from here to the top of the zone. And if you wanted to sell, you can sell from right now to the bottom. So let me drop down to the 5 minute and see how high is high and how low is low. So being that we came into this blue zone and then found momentum to come up, consolidate and jumped up really high, but still found support right here, kind of tells me whatever's down here is kind of strong. And it hasn't come back down to this area of 77.5 flat. The wick only pushed into that area. Not even a body came close down to this area. So I think that ultimately if we were gonna take it short, it would only be back down to the blue zone. So let me give you some areas I think it would be good for the buys first and now the sells. So the buys first, a good area I think would happen would be like we always want to buy low, sell high. So if we can get another bounce off of the 65 moving average around the 77.7, right where the 65 moving average is, if we can get the market to bounce off of this price and stay above this green line, I would think about taking it back up to the top of the zone. Probably not all in one go. I would do, take profit 1 and take profit 2. So obviously the first area I would take profit 1 would be at this area where this wick is, where these highs are, which lines up with this high, which was a high before any of this happened. Move the market over. And maybe I wouldn't even take it, possibly I probably wouldn't even take it all the way to the blue zone. Maybe I would get out somewhere before the blue zone. But then I wouldn't want to shortchange myself. The only reason why I'm even saying that because it is the last time it tried to hit the blue zone, it only got hit by a wick. A body didn't come nowhere near that blue area. And if I had to possibly take profit somewhere in this blue zone, it's possible that the market didn't hit it. And that if I wasn't paying attention or on the markets, the market could have had really went against me, which it did all the way back down to the blue zone. So if I was to take it long, it would definitely be before the blue zone I like this area right here. This will probably actually be my take profit just because this actually looks like a good duality level where the highs line up with the lows. And yeah, so that would be my moves for the buys. So I would get in. My entry would be down here on the the red SMA 65. I would want the market to bounce off there. And even if I couldn't even get it there, let me see. I would try to get another low area or the bodies. So pretty much what I'm keying in on are, let me zoom in a little bit more. What I'm zooming in on are these two little red and green candles, which are kind of like identical. I don't know why those two things attract to me. Maybe because they're opposites and they're identically alike. So I'm like, you know what? I'm gonna use my entries off of there. So actually, I would get in off the bodies of the candles, the bottom of those candles, and the break of the top of those candles. Don't ask me why. Well, don't ask. I'm not gonna say don't ask me why, but I don't know why that those two candles attract to me so much, or I'm attracted to it. I should so to say.
That was my next
That's,
question.
huh?
That was gonna be my question.
Yeah, like what attracts it to me? I don't know. I think simply because those two candles are opposite and they're exactly alike and they're right next to each other. Why are they like identical? Why are they identical like that? I think that's really the reason. So I'm going to use that just because that maybe that answer can't be given. That is the reason why I'm onto those candles so much. So I'm going to use these two candles as like my key or to get in. So it would either be at the bottom, middle, or the top of those candles. And possibly this it's the market is now possibly trying to take off. Um, and I would never advise just to just hop right in. I would always try to get a bounce off of the bottom of somewhere or something, but try to get an entry in. Just don't get in. So all right. So now let me look for the sells. So the selling, I would try to I would only think about hopping in for the selling if the market breaks these lows and this bottom down here. If the market can break this area right here where this low and this is, that would be my key to get in. And since I want to buy low, sell high, it would be probably at the top of this box, most likely, and I'll just be taking it down. All right, so let me not ramble on. Let me give the floor to my boy Ty. Tell me what you're thinking, family.
All right, let's start out with the daily chart. Let's get a big picture view. All right, now let's high support and resistance. So overall, I know on this pair with AU and with GJ, I was telling you guys about the potential head and shoulders. Now, my analysis on the head and shoulders, I'm moving away from that mainly because, for one, we haven't broken the neckline, which is a very important level for any head and shoulders pattern that you ever run into. So for this AU pair right now, our neckline will be located at 76 cents, even right around that area. Since it has failed to break past that area, we can't necessarily consider this a head and shoulders quite yet. Now, the only thing that's really giving this head and shoulders just a inch of life still left is the fact that these right shoulders at 78 have yet to be broken, right? But if we look at the price action that we're seeing coming into those levels, we're seeing higher highs and higher lows. If we look at the overall trend, we know that the overall trend is up. So when the trend is strong like this and you see a potential bearish reversal signal that can't get confirmed, start looking for the other way. So in terms of a head and shoulders, if you don't see that neckline get broken, you see prices continue moving up like they are, eventually you want to look for the break of the right shoulder, because that break right there would tell us and give us confirmation for sure that prices do want to move higher and continue eventually to move back up to the eventual, I don't know if it's the all-time high, but at least the most recent high that we made at 80 cents. So I think as long as we can get above 78 even, that right shoulder level, we should be good. Now, if you look at where we're at right now, we're not too far away from it. We're only about 25 pips away. That's what Darren was telling you guys about when he showed you the zone from earlier. 25 pips away, which that could happen overnight. That might happen on the stream while we're talking. So let's break it down to the hourly chart and figure out exactly where we want to get in, because entry selection on any chart, whether it's AU, GU, Bitcoin, or US30, is extremely important. And let's hide the moving averages real quick.
You said hide the moving?
Mm-hmm.
I did hide them.
Nah, hide the moving averages.
Oh, the moving averages. Oops.
All right, and let's go to the 4 hour. So if we look at the 4 hour, if we analyze the chart and we start at the bottom that we see located at the beginning of April, from that point, like Darren was telling you guys, we had a consolidation zone that formed, yes, and then we broke out of that zone, continued to make higher highs and higher lows. Now we're ranging within the next consolidation period, right? But if you start to look at what happened after, look at the period from April 14th to the 26th. Now look at what starts to happen after that time period. We used to come back all the way to the top of the zone at 78.20, then come all the way back to the bottom. But on the most two recent touches, we have failed to get all the way back to the bottom of the zone. That right there creates the higher lows that we're looking for, because we know that the overall trend is up. So now that we're seeing higher highs and higher lows, well, not higher highs, but two consecutive higher lows coming out of a consolidation zone, that kind of gives us a signal that buyers are gearing up to push the market higher past 78.20. If you guys want to, actually, let's bring up the support and resistance and let's show the people a good technical analysis pattern that if they don't know, they'll know by the end of tonight. So can you bring up the horizontal line or the horizontal ray?
Okay. We want to put it.
And draw it along the top of the zone where we have our market tops. Yep. And then grab a trend line and draw it from 77 even at the bottom point of the consolidation zone.
So where?
Nah, start it from the bottom point of the zone. So around 77 even at April 21st. And then run that line up until it reaches our uptrend line. A little bit further. Extend it all the way to the top green line. All right. And this pattern right here, this technical pattern that we're looking at, represents what some people call a wedge, some people call an ascending triangle. But basically, it's a technical analysis formation chart pattern that you look at in bullish markets. Now, typically, this pattern works the best when the market trend is up. It comes out of a consolidation area, because one thing about consolidation areas is that eventually they do have to break. So this is one of the chart patterns that you can use to figure out whether or not a break is imminent and a break is on the way. So basically, you just see prices ride up the bottom trend line, and then once they get up to the top line, they kind of hesitate a little bit, have one last pullback, and then eventually, most of the time, they break up above the higher price line at 78.20, which we're at right now. Well, not too far away. So overall, that's what I'm looking for AU. I'm looking for the up move, and I'm being patient until I see what I like.
All right, there you have it. We're looking to stay more on the side of the buyers. We're just going to be patient and kind of let that trade come to us. And so let's just slide right on into. We're gonna slide right on to DJ. All right, so for GJ, this looks like the market has just really just been booming up, just making higher highs and higher lows. Um, so let's look. Let's go look like right at the weekly. So the seven. Let me go to the monthly. So pretty much the same thing was happening for GJ. For AU is happening for GJ. And when I say that, it's because on the highest time frames for both of them, the 7 is below the 65. But when you drop down to the weekly and lower, the 7 is above the 65. So at least for me, I'm going to try to stay on the side of the buyers just because on Tuesday, I wasn't sure which way to go, but I let the market play out. And now it has confirmed to me it's been making higher highs, well, not higher highs and higher lows, but it's been making consecutive bullish candles. So with this one as well, this one has been going is in like a consolidation area between 152.42 or 152 right at the bottom of this yellow area and the top of the green zone. Let me hide this stuff. And so pretty much it's consolidating between these two areas, the 152, 153 even, and the 149.50 area. So for us, we're just kind of waiting for the market to break out of that consolidation, whether it's up or down. But we want to be prepared for when it does break. When it does break. So let's drop down to the daily. The daily still, kind of really hones in on the fact that the market is consolidating. The 7 is above the 65. So to me, I think I'm gonna stay on the side of the buyers. Like I said, I wasn't sure on Tuesday, but today, the market has shown to me that it has been making trends up. So if we're gonna buy in, we got to make sure we get in at a lower area and take it higher. But when I look at this right here, I also kind of noticed that, yeah, we made a high here at the 153, 150 areas and came all the way down to the lowest area or retested the area down here at this low. So the market retested this lower area from over here and couldn't break that area and it's starting to make its way up. But kind of notice where the market is kind of having, let's say, retesting at. It's retesting at areas where it has retested before. At this high area at 151.90, it retested it from here, 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 and even here. But this is where it all started. So this to me can either let me know it's going to struggle here before it breaks to come back up to this top, or it's going to play suit like it did the last two times, which was come into this area, find support, and make its way back down again. So I want to be cautious where we are right now because we are sitting at high areas where the market does find its way all the way back down. So let's drop down to the 4 hour. So the 4 hour kind of lets me know two things: that the market has been doing like this flagpole type of formation where we get a nice shoot up, we get a flagpole, we get a flag, couldn't find no momentum to break this lower area, and then it shoots up. It shoots up, it does another like flag, so to say, It finds the area of support, comes back down, and then it shoots up again. Then we have another flag type of formation. It forms the flag, then it shoots up. So now we have another little flagpole area. But the difference between these flagpoles that form down here and these flagpoles at the top is that this flagpole that's sitting at the top is aligned up with this high over here, which every time it comes to, it finds some way to come back down. So I think and also what scares me too is that the way this candle formed here with this wick. Like me and Tiberius said way before, when we used to say, when you see this wick, we already know what time it is. But that's not the case, so to say, in this type of situation. So we want to make sure that we look at this market in all of its spectrum, meaning that we got to make sure we plan out from A to Z. So I think let me unhide my signals. So I think if the market could come back down to the 7 moving average and find resistance, it would be safe to say we can get the market to come back up to try to find some support back at these lower areas up here. Just because it kind of looks like the market has broke this area here. So anytime the market breaks that area, we're not going to say it has to, but it comes back down to retest. Like, are you sure? And like, yes, it's going to be like, yep, you definitely want to bring the market up higher. Just because you broke me, you came down to retest and say sorry, and then you took back off again. So let's see how much pips we are at from where we are at to where we are to the 7 moving average. Well, I didn't get that good. From where we are. So about a good 20 pips we're pretty much looking at. So let's find a good area to hop in at on a lower time frame. Let's hop to the 5 minutes, see how high is high, how low is low. So this looks, to me, looks perfect because the market looks like it's possibly coming back down to retest this area, this lower area where it always found resistance. So now it looks like the market has broken into the market, into this box right now. So if we can get resistance at the bottom of the zone at 151, 151.71 or 7 flat, well, we're going to do 725. We're going to do 151, 725. That'll be the area that we're looking to get in at. So we're looking for it to come down, find resistance at the 171, 725, and then push back up again. But we have to take heed that, hold on, let me go to the 30-minute. We got to take heed that it's a possibility it could come all the way down to this area, then turn around. So sellers, so that's pretty much my areas for the buyers. Sellers, I think this could be possibly your chance now to get the break of your lower areas, but you want to make sure that you get in at a higher area. So this could have been a good area for you guys to hop in at. You could have got in here, got in off the retest of that wick at the 7 moving average and bring it all the way back down. or it's not too late, you can get it on the break of this low down here, these lows down here. So take heed of that, and you can just definitely want to take it only back down to the area where the buyers ultimately want to get back in to take the market up. So you're just pretty much the buyers need your move to happen. Yeah, so the buyers need the sellers move to happen to execute their buy move. So let's see how many pips it is from where, let's just say so up here. From down here to down here is about a good 30 pips. But let's just say you got in kind of late. You got in down here at these lows. You can probably get a good 20 pips out of that. You can probably get possibly a good 20 pips out of that. So, let me see, did I cover everything? I said for buyers, we wanted to get in at the bottom of either this level or down here. Sellers, we said that you want to either get in on the hit or retest of the 7 moving average or these lower areas down here where the market could possibly break, and only take it back down to the area where the buyers are going to take it higher. All right, so that's my pretty much spiel. I'm going to pass it over to Ty. Tell me what you're thinking.
All right, so let's go back to the 4 hour chart.
Hold on, I'm freezing. Four hour, right?
All right, so here's what I'm seeing. I am right now definitely seeing an uptrend. If you guys remember from what we were looking at on the daily chart, we're close to the market structure tops right now. It was located at around 153, so we're only about 125 pips away from that right now. So in terms of GJ and how it moves, that's really not a big move at all. That could happen in a span of less than a day, less than 24 hours. So I like the proposition of GJ eventually being able to touch that high, but I don't discount the fact that it could take a while. So what I'm looking for a good support level to go long off of. I do like the level at 150, 150 that Darren had a zone drawn on earlier. I think that level is, in my opinion, probably the best level on the chart right now. The first reason is because that was a previous high. Whenever you're in an uptrend, if you remember and recall our market structure classes, we tell you guys that we want you to look to the left in an uptrend, identify what used to be the previous highs, because once prices break above those, when they come back down into those levels should now act as support, and you should see buyers step in at those levels if the uptrend is still strong. So that's what I'm banking on right now. I'm waiting for that 150 150 level, but honestly I wouldn't be surprised to see prices come back to maybe 151 even. That could still be a potential good zone for the buyers to get into, because if we follow it down, it actually lines up at what used to be what used to be resistance across the board from April 12th all the way to the 26th. So remember, now that prices have broken above it, it should act as a support level if prices are ever able to come back down to those levels. Now, what concerns me right now in terms of the selling side, because you always have to respect both sides of the market, is that we do have a long tail candle wick forming off of 152.50, and we have a lower high coming out of that area. So that right there tells us that as buyers, we definitely need to be patient. Whenever prices come into a demand zone, you don't just want to go long because prices touch that area. You want to see prices touch that area, bounce off of it, and then make a higher low. So that's what I'm looking for right now. I'm waiting for a higher low bounce off of the 151.50 level, and if I get that, I'll be looking to take the long trade for GJ.
All right. All right. There you have it. So ultimately, we're looking to take the market up higher. Um, let's see. Yeah, you were planning to take the market up higher, right? You wasn't looking to short, right?
No.
Okay. Uh, Speaking of, let me just say this before I pass it over to Ty. To me, with this formation here, it looks like it's struggling, which kind of ultimately that's why me and Tiberius said we're taking it long. But it looks like it's kind of forming exactly what it formed over here. But the only difference now, it hit this top zone now. So if this was the ultimate goal of the market before it went back down, I definitely want to definitely be patient though before we happen to take that long. And where you say taking, where will be your take profit at?
I'm going back up to 153.
Okay, okay, yeah, but yeah. So definitely be patient. Don't kind of rush it and think. So get in, take. Let me take it slow. When you take your entry and you get to your take profit, get your take profit and get out of there. Don't hold it with the anticipation that the market is going up because you have to understand the market where it's at right now. Every time it came to these areas over here, kind of especially like over here, it came up to like 150, not 153, but it came up to 152.50 and shot all the way back down again. So take heed that where it's at right now is a chance that it could go all the way back down again. So that's my little spiel. I'm gonna pass it over to Ty.
All right, so let's get into it. All right, so the first pair I want to start off with tonight is US 30, my good old reliable Dow Jones. As you guys know, one of my favorite pairs, and as of lately, not too much has really been going on. If you look at where we're at right now, actually, as a matter of fact, let's back up a little bit. Now, let's analyze the entire trend for the most part. Now, if we look at what the Dow Jones has been doing, it has been in a very strong uptrend since the lows of the pandemic last year in March of 2020. Ever since that point, we've been moving higher, breaking past old all-time highs, making new all-time highs week after week, and that's what you like to see in an uptrending market. Now, I want you guys to go back and look at the historical perspective of the Dow Jones. I want you to look at the chart from around maybe the 80s up until where we're at right now, and I want you guys to see how strong that uptrend is, and why we like to look for long trades when it comes to US 30 and most other US stock indexes or indices. So right now we're pretty much in a consolidation range between the bottom wicks at 725, well, excuse me, 33,725, and then we have our top side resistance of our consolidation zone located at 34,175. So if you round that off, it's about 450 pips, which is a pretty good range for the Dow Jones, and we can trade a lot in between that. So let's break it down to the lower time frames and see exactly where we need to hop in and see what's important for us. Because what I've noticed, and I want you guys to kind of pick up on a little bit, is that let's actually delete this song. It hasn't done much. Click on this right here. So if you guys notice, prices have been stuck in between that range that I just mentioned, right? So if you look at what happened, I think this is today, earlier on this morning at around 11 o'clock in the United States session. Prices came back down to this support level at 33,800. Bounced off of it, had a V pattern bounce, right? So all we're looking for now is I'm expecting a move back up to the top to test 34,200. Now, I just need to find a good point to go long. So I'm looking to the left and I'm trying to find areas that used to be previous highs. So one thing I'm noticing is this level right here at 33,950. That's also another one of our half number levels. 950 is the halfway point between 34,000 and 33,900. Always plays an important role, especially when it comes to support and resistance. So I like that level right there. Also, if you look to the left, let's follow that level. It's been interacted with before and it's been important. So the chances of it being important the next time it comes down is highly likely. So that's one of the levels that we can look for, 33,950. And of course, I would say that the best level on the chart is still the bottom of the consolidation zone, 33,800. But you got to understand that this is an hourly chart. If you just look at the time that it takes for this pair to go from the top to the bottom, this one started on April 16, 2021 at 1 o'clock. Took 4 days to get back to the bottom. April 20th, right? Took 1 day to get back up to the top, 2 days to get back up. Usually it's around 1 to 2 days. You had one outlier that was 4 days, but 1 to 2 days. So don't expect for this trade to happen immediately. If you want to catch the best trade off the bottom, you got to be patient. It might not come tomorrow, it might come next week, but keep that option open for yourself. Now let's bring it up to the 4 hour chart just to get a better picture of the overall consolidation zone that we're in. We see what we're working with. If you guys can go long at the bottom of the consolidation zone and hold that trade, you should be good for the most part. I will put my stops right below the zone, about 200 points below at 500. In my opinion, that right there will probably be the last frontier. And as long as prices stay above that, you should be good for higher prices in the future. I like the move on US 30 right now. We know that this is a pair. That's an index that likes to move up. So let's play it. Let's play this smart and play this consolidation zone as we should. And I think we'll be fine and dandy. So with that being said, let's pass it over to Darren and let's get his breakdown for the Dow Jones today.
Take off the volume and go to the weekly. I was going to go to the monthly because, like Tiberius said, this is a known pattern to go up. It has a tendency to go up. So we're just pretty much we can use judgment on the weekly and daily, especially the way I trade and I trade, which is intraday. So we just ultimately see that the market broke it made higher highs, higher lows. The 20 is above the 50, and that the bulls are in control. Drop down to the daily. All right, kind of, same story, but now we're zoning in more and more just to get where we want to get in for our entries and exit. Zoom in a little bit. So where we are right now is kind of like it's a area which is within a consolidation. So kind of like where Tiberius said, not don't bring up the single signals just yet, but where his green line was ultimately the best price to get in, at least for me. But if we were to kind of look at the chart, just bare kind of like this, like Tiberius said, excuse me, we definitely want to, if we're looking to go to long, we want to make sure we get it at a lower level. So where the market has bounced right off at the 20 before, I think that it's a good possibility we can get the market to come back down and touch that 20 moving average again. And if it doesn't have a good enough momentum to come back down to that low, I would zone in on the red candle right before the green one. That one, I would kind of use that as like points to get in. So I would either want to get in on the bottom of that area, the top of that area, the top of the body, to the top of the body, and then the top of the wick. So I would use those three areas to kind of get in at, but unhide your signals and drop down to the 4 hour. Zoom in a little bit. So yeah, I think that if we're gonna definitely go long, like Tiberius said, we definitely want to be patient because with any good up move, the down move must happen, and you don't want to get caught up in the down move that has to happen first. That took away your opportunity to get in for the long. So I want to be patient because I think right now, I think it has enough momentum to try to come down and break over those moving averages and come back down to uh, those wicks right around 33, right above 33 800. So go to go back right there. So go to the no, go to the candle to the left. That one candle to the left. Yep, that one. Nope, one candle right next to it. Yep. So um go to the top of that candle. Yep, that area right there. I think it could possibly have enough momentum to come down to and hit that area before it goes up. But I think that if it does break the moving averages, I think it's going to blow past that area I just said. And probably that's the momentum it needs to come down to where that green line is, where ultimately I would want to get in for a buy. So sellers, I think it's we can you can definitely capitalize on this move and try to bring the market back down to the green line at 33,800 because that would be the perfect area I would want to get in at to take it long. So to recap, 33,800 is definitely the ultimate area I would want to get in at. But if it didn't have that enough momentum to come all the way down to that green line, I would want to get in at the bottom of the bottom of the bodies on the candles that's at the bottom of the green line. So go to the candles that's that wick. Yeah, so I want to go to those. Yep, I want to get in at the bodies, the bottom of the bodies of those candles. If it didn't have enough momentum to come to the green line. Yep, right there. Because maybe the market, because to me it kind of looks like recently that when it came down to that green line, the body didn't even hit it. It was the wicks that hit it. So I would want to take it up to the bodies, the bottom of the bodies on those candles. That would I would want to get in there. So that's my little spiel on this one.
All right. So there you go, good people. That right there is our analysis for Dow Jones, aka US 30. You can trade these on your, I believe, all of your trading platforms, especially if you have MT4. And if you trade stocks, ticker symbol DIA. If you trade futures, ticker symbol YM. So let's move on to our next pair that we have on tap tonight. Let's get all down with the good old dollar Swiss. Now with this one, we've been making some crazy movements lately. Remember, not too long ago, a couple weeks back, I was telling you guys about the potential head and shoulders, right? That never materialized. Prices got back down to the neckline. They didn't bounce. Well, they bounced for one day, and then they ran straight through that level. And we pretty much started the next leg of the downtrend. So before we analyze this daily, I want to bring you back out to the weekly chart to show you exactly what the long-term trend looks like. So we can really follow this thing all the way back to this top that we made back in April of 2019. So almost 2 years ago, we made a high at around $1.02. Now, ever since that point, we've been making lower lows and lower highs, moving down towards the ultimate low that we made at 88 cents. Since that time period, from the beginning of the year, which is where this happened right here, this bottom, prices made a huge move to the upside, about I want to say 600 pips, let me say. Yeah, 640 pips. Very significant move that happened over the course of 3 months. But as soon as April started, the sellers stepped back in and said, hey, buyers, you had your time. It's time for us to get back to it. And this was a weekly chart. Keep that in mind. We had a huge bearish engulfing on the weekly chart, followed by 3 more consecutive weeks of downward selling price action. So what we're looking for right now is prices to come back up and test what used to be resistance. That goes back to our market structure lessons. Remember, in a downtrend, you always want to wait for prices to retrace back to what used to be support levels, because those support levels now become resistance, and those are typically the best levels that you want to sell from. Notice how in this trend, every time prices pushed down and started to consolidate, they came back to what used to be a last low. So they did it right here, came back, touched the last low of this wick. They pushed down. Actually, you know what? Line chart will show you a lot better. So prices pushed down. They eventually pushed back up and retraced to what used to be a low. So that's all we're looking for when it comes to this chart right now. So let's kind of zoom into where we're at on the daily. Now, if we look to the left, the last low is located at 91.30. If we can get prices to come back up to this level, I think that we should be able to see a bounce. And if we see a lower low get formed, a lower low get formed coming out of this area right here after the bounce, I think that we should be good for our selling trades. Now, let's break it down to the 1 hour so we can make sure that our level is valid. Now, on the 1 hour, we see a lot more of a different picture than what we were seeing on the daily. On the daily, it seemed as though the downtrend was just straight down. But one thing about the markets is that there will always be ebbs and flows. So don't get too excited when you see that the trend is strong, because the retracements and the pullbacks, they will come. And if you get too excited, they could hit you and hit you for a loss. So make sure you keep that in mind. Always be patient and wait for your movements. But on the hourly chart, we can see that we've been pretty much making lower lows and lower highs. Now, most recently, we established the consolidation zone from April 19th until April 28th, with a bottom located at around 91.25. The top was located around 91.75. So a nice 50-point range for us to trade within. Now, yesterday, prices were able to come back up, test the top of that zone at 91.75, and ever since that point, we've been making lower lows and lower highs that have allowed us to break through our former consolidation zone. Now look at what we've done. We've broken through and we made a new zone. So the top of our new zone is located at 91.11. The bottom of our new zone is located at 90.78. So of course, since we know that the trend is down, we want to short from higher prices. So we want to wait for prices to come back up into these levels at 91.10, 91.08, 91 evenish, somewhere around that area. And that's where we want to look. Well, that's where I want to look to go short, and potentially either, if you want to be aggressive, you can take it back down to maybe 90 cents. Or if you want to be conservative, you can take it back down to the bottom of market structure, aka the bottom of the zone that we just made, located at 90.81, 90.75-ish, 90.78-ish. So keep all of those prices in mind. I think dollar Swiss is probably a good move if you want to look for something that's trending, because the trend on dollar Swiss all year has been great. Whether you're a bull or a bear, this market has been great for all sides. So with that being said, let me pass it over to Darren and let's get his thoughts on dollar Swiss and what could potentially happen in the future.
All right, guys. All right. So, unhide your signals again. Do you have like a zone somewhere? I don't know. Maybe that was just me. All right. So, just looking right here off the daily, um, yeah, I see that that head and shoulders that me and Tiberius wanted didn't happen. So that right there lets me know that the market is trending down. And like where Tiberius said, right at the lows where we just broken out below at 91, is it not, excuse me, is it 91.30?
Yep.
Go to, yep, right there, yep. So I think if we can get prices to come back up to that area, I'll be comfortable to take the market down lower. But if we didn't have enough momentum just to get that high, the red candle that we're right next to where we are right now, go to that red candle right where we are right now. The next one over, yep, the top of the wick, yep. So if I would probably try to take it off of there at 91.18, 91.20, I would try to get in at, just because if it didn't have enough momentum just to come back down, just because that, go over to the next red candle to the left now, that one right there, that one looks really, really, really strong, and was probably the candle that needed to form to eat, just to break the lows where we were, because where we were just at, that consolidation right there, we were there for a little while. We was there for like 3 or 4, like 1, 2, 3, 4, 5, 6. Yeah, we were there in that consolidation area for like a week. So that diesel red candle right there, I would definitely try to utilize that red candle just because it was the candle needed just to break the lows. So, you know, maybe I would use that the top of that candle or the bottom of that candle to get in, or the top of the wick of the red candle that's right next to it. So those could be three areas I would look to get in at: the bottom, the middle, and the top. So I'm pretty much using all areas of those candles that just formed, because I think those were the two candles we needed, because we were sitting at in that consolidation zone for like 7 days before the market decided to finally break. So let's drop down to the 4 hour. Yeah, like um yeah, I would try to really utilize, and also to me, it looks like it might have definitely retested that area where it broken out of, that green candle. Yep, that green candle came right up and hit that area. And being that it looked like it did that retest already, and it could definitely now push down. So maybe I would bring my areas to get in at a little bit lower, maybe at the top of the bodies. Yep, you knew exactly what I was talking about. Yep, right there. So I would try to use those areas to try to get in, maybe not those lows, just because it looked like that green candle hit it perfectly for the retest. Drop down to the 3 hour. I want to see what's the next candle that forms around that area. Yeah, two double top came up and touched it. Yeah, so I would definitely try to use the top of the bodies to get in on those on this entry. I wouldn't really advise to go long. Um, and if I did have to advise you, it would only be to that area where we are right now, just to that area where I'm speaking of. And I don't even think that's a lot of pips. That's probably what, 5, 10 pips? No, to where we are right now to there. No, bring it down to the top of the body. So yeah, that would be my move for the long if I had to take a long. Where we are right now, just to the top of there, and the top of there is where I would be looking to bring it shorter, just because the market has shown that the strong momentum or the bears are definitely in the market heavy. So that's my analysis.
All right. So that wraps it up for dollar Swiss and US 30. Appreciate you guys for tapping in and listening to that tonight,
Mm-hmm.
because that wraps up our technical analysis session for normal currencies, normal
Mm-hmm.
pairs. And that
Yep.
leads us to something new and improved that we've been waiting to bring to you guys for a long time. In this segment of our show, we really want to show you new things in the market, things that we don't usually go over, but things that you should know about. Because if you guys don't know, the market is an expansive world with all types of instruments, all types of categories that you can trade. It's not just what we show you. And we want to expand that not only for you guys, but for us as well, so we all can come here and learn.
Mm-hmm. Well said.
So let me pass it over to Darren, and let's get his analysis and let him start breaking down today's featured pair.
All right. So the pair we decided to go over tonight was Bitcoin. So I know Bitcoin is not unfamiliar to you guys. I know everybody has heard. Not Bitcoin. Which one we said we was gonna do?
I think it was Ethereum.
Yeah, that's the one. Yeah.
Share your screen.
Let me share my screen. So Ethereum is a cryptocurrency that has been being bought up a lot lately. I don't know if you guys pay attention to financial news or articles or even Instagram posts, that a lot of companies have been buying up Ethereum. And I'm not pretty sure what it is, but we are on a computer and we have the internet on our hands. What is Ethereum? Ethereum is a decentralized open source blockchain with smart contract functionality. Ether is the native cryptocurrency of the platform. It is the second largest cryptocurrency by market capitalization after Bitcoin. So a lot of people thought Dogecoin or whatever it's called was going to be the big thing or next to Bitcoin, but clearly it's Bitcoin, Ethereum, than everybody else. Ethereum is the most active or most actively used blockchain. So it's a blockchain. And let's just say none of us knew what a blockchain was. Let's just look at this really quick before we get too carried away. Blockchain.com is a cryptocurrency. Oh, blockchain. Is a cryptocurrency blockchain explorer service, as well as a cryptocurrency wallet and a cryptocurrency exchange supporting Bitcoin, Bitcoin Cash, and Ethereum. They also provide Bitcoin data charts. So if something needed to even have cryptocurrency. So a blockchain is something that supports cryptocurrency, and cryptocurrency is another form, or is, I think it's soon about to be another form of exchange. So with that said, we can see that the market has definitely just broke a higher area where it was at before, and it's been making higher highs. But like we said, anytime the market breaks and makes an all-time high, it has to come down to retest. Let's drop down to the daily. The daily looks like it's fine at the top of this area. And I'm only putting this as high areas that the market has broken. So let's drop down to the 4-hour. To the 2-hour. Let's drop down to the 5-minute. I can't get to change my joint. I can't take the joint off. Get to the top. It didn't even fit my screen anymore. What was I even trying to do? Oh, I guess it didn't save my. Trying to put my signals back on here. But I think it's ultimately going higher. So I was going to use this high here as a way for the market to come back up, or if it didn't have enough momentum to come down that low, I was going to use the 7 moving average, and then I was going to use that to break it up. But I'm going to pass it over to Ty and get his ideas.
Can everybody see my screen?
Yeah, go over to your gym. My gym messed up.
All right, here we go. So for Ethereum, I like the areas that Darren drew around 25, 29. And actually, that's not too far away from one of our major quarter levels. Remember, the quarter levels work on all types of charts, whether it's Forex, US 30, stocks, crypto, whatever it is. If it follows the rules of technical analysis, the quarter levels will definitely always be a major factor, as we see right here. So I think if we can get prices to come back down to 25, 25, I think that would be a great level. So let's go ahead, just mark that level up right there, because we want to come back to these charts eventually, sometime in the future. We can't guarantee that it'll be the next day because we want to show you guys a lot of things. But when we do come back to it, we want to see what these levels have acted like and what exactly has been going on with these pairs as we learn more with you guys. So I think that this level could be a great support level to hold up, because we know from our market structure classes and our lessons that when we're in an uptrend, we look to the left and we look to find areas that used to be previous highs. As we can see, this area definitely fits that criteria. As a matter of fact, let's pull it out to the weekly, because I want to see if that level represents an all-time high. And I believe that it does. That's the highest price, at least at that point, that had ever been touched before. So let's get back to that. So this was the all-time high on April 15th. Now we've finally been able to break above those prices. So it only makes sense that we would probably come back eventually, retest that level, and then we should see buyers step in and push prices higher. And if not at this level, I definitely believe that the bottom of this wick, the top of this wick from this green candle should be the next level up. And this level is located around 2650. So not only did we have a major quarter level act as support, we also had a major half number level pop up on the chart as well. So there you go, the quarters theory is proving itself to be useful once again. So I think, if you want to be, honestly, I think it's probably coming back to 2650. But I'll also give you guys the secondary level, because I've seen a lot of instances in a very strong uptrending market where you think it's coming back to that first last high, but it really comes back to the second. And then everybody pretty much, they go long at the first, they have their stop at the second. So I want to tell you guys that if you want to be conservative, you could actually get it at 25.25. Only reason I say you're aggressive if you get it from up here is because it could still run. But everybody has their own trading plans, and whatever fits for you, that's what I want you to pursue. But overall, we're still looking for long plays on Ethereum. Very nice uptrend. This is actually the first time I've ever really looked at Ethereum on a serious type of analysis type. So I like what I see so far. Definitely higher highs and higher lows. That's what we look for in uptrends. And I mean, this chart looks just as good as US 30 and just as good as Bitcoin. Very strong uptrend. I like what I see.
So my chart messed up, but I want to see. I kind of see a little bit better on Tiberius's. Drop down to the 2 hour right quick. So it looks like so we got the break of those highs up there. I'm sorry guys, we're dipping back into it because I know we're supposed to move into our favorite part of the show, but hold on, because I didn't get the chance to get this out on my turn. Um, so it looks like we got the break out of that so-called, I want to call it like a consolidation, because where that high came over here by the 23rd. No, go away over here. Yep, the 23rd. It made that high. So that was the not really the start, but it made the ceiling of that consolidation. So the market dropped all the way out of it. Then it found its way back into that little two green zones. And then it hit the top of it again. But if no, go over. It faked out. Yeah, it faked out. It hit the top of it, came down, came up, faked. Yeah, and then it came down again. But it came down exactly all the way over. If you follow that price all the way over to the left, that 23rd area. It came down to retest that 23rd area, and then it shot up again. So once we hit that high and shot up again, it consolidated again, and I feel like we're now going to try to come back to that high where we formed, not the 23rd, but the around the 27th. Go over a little bit, right there. Yeah, that high right there. But the only thing that kind of not really worries me, but is that we hit that low right there with that green candle, that upside down hammer. No, not an upside down hammer, a hammer. You see that green hammer? Yep, that green hammer formed right there, and it hit, and that price lined up exactly with that high. So I think it's very possible that it could be moving its way back down to that lower green uh, line where Tiberius put, and this is definitely the first leg of the lower of forming a higher low. Excuse me, a lower high. So it came up to the yep. So go back up to the start of it. Yep, right there. So it came down, made that low, came back up, made a lower high, and now we could definitely get the pull back down again to come back down to yep. And actually, that's a better area right there at the 2685, like right around there. Yep, to get the retest to shoot back up. And I only say that one just because it looks like we no, not really. I was gonna say if you have pulled that green, not pulled it up, but pulled the green up, yeah, pull the green up right line up a little bit to where, so no matter of fact, I'm gonna show you where to go to the where the high was at 27th. Not that one, over to the left. Yep, bring the green line up to the top of the body. Yep, right there. And if with me doing that like that, I was going to see if that green hammer touched that green line. And I kind of feel like maybe it did, because it came exactly where that low of that candle is, touched exactly where the high of that candle was on the candle. Yep. So um yeah, so I think it could definitely making its way up. But before we get any good up move, we need the down move to happen first. So let's definitely anticipate the short move happening to set up a good area for us buyers to take the market up higher. And I feel like in this type of market right here, unlike Bitcoin, where it does have its strong momentums of down moves, it looks like this market could goes down too. Go to the 4 hour. Yeah, it has it's trending strongly down too. Yep. Yeah, it looks like it's kind of forming. Its formations has been really like cryptocurrency. I mean, not cryptocurrency. This pair has been really moving like forex pairs. Like the down moves have been really big, unlike like other cryptos or whatever, where it does go down, but it's short. But these drops and down moves are really heavy and big. Yeah, see them down moves? Them down moves are kind of big. And whatever happened at the start of 2021, but Ethereum has been taken off ever since the beginning of 2021. And look how much, yeah, but I said, look at that, look how much it has been going up. So we can definitely expect to see some more up moves from Ethereum this summer for sure.
Yeah.
So, do you have anything else to say, Ty?
No, I agree. I think that overall, Ethereum, I think Ethereum, Bitcoin, maybe throw Doge in there a little bit because it's still in the uptrend. They have the potential to run as high as people want them to go. As long as there's buyers and it's still demand in the market, I think the
Mhm.
uptrend continues.
All right. So there you have it, the wrap up of our new section of the show. You're definitely going to be seeing much more different markets that this financial world has to offer. I know we always go over forex and just a little bit of the crypto. We do Doge and we do Bitcoin, but we want to start introducing new things that maybe even me and Tiberius never heard of before. But we definitely want to expand some of our knowledge and give it out. And I don't know if anyone has told you guys this, but I'm gonna tell you it because it was told to me. If you can trade forex, you can trade anything that has a chart. I'm not sure if that's too valid. I think I might have asked Tiberius this for stock, but I know for sure if you learn how to trade forex, you can trade anything that has a chart. So, with that being said, we're about to move into our favorite part of the show, which is my favorite part of the show, which is Traders Talk. Trader Talks gives us a chance to, give you the real deal on what trading is all about. We want to give you keys. We want to give you lessons on, what can happen in a journey when you decide to be a trader. I don't want everyone to think it's all about making $1,000 days, and people posting saying, "Oh, I made $600 in just 3 minutes," or "I made $500 in just 1 minute." Like, I don't want you guys to be fantasized with the amount of money and how the time frame it took to make that one money, because you have to understand with forex in this trading, yeah, that person might have gotten 600 in that 5 minutes, but he hasn't told you how many times he has lost his account trying to get that $600 in just 5 minutes. So I'm pretty sure if that person is up making $600 a month, he has a story to tell you on the journey on what it took for him to get to where he is now, where with that $600 in 5 minutes, because this is really a skill you have to really sharpen every day. It's a continuous learning thing. Like, even for me, there's some things I always work on daily when I look at forex in trading. Like, I try to really, with the trading, like I said, if you can trade this, you can trade anything. So I try pulling up different things in the financial market, and that's why we added this new section in our show where Ethereum, where we go over Ethereum. We're gonna try and expose, not only for your knowledge but for our knowledge as well, different things we don't normally go over. We always go over the same pairs every week, which is, AU, GJ, U30 Swiss. And the market in this financial world has way more to offer than just that. And that is why we created that section. So it's not like we're exposing you to different things. So with that being said, I think that one thing I want you guys to understand with Forex is that if you put the time in and put the work in and really don't look at the money and really pay attention to the craftsmanship of it and getting and securing the pips, the money and the riches and the wealth will follow. It's like with anything, like basketball, like when you're a youngin playing AAU, I mean, I said AAU, paying AU, excuse me, guys, that you don't get paid at first. You definitely got to put the time in, go to practice, go do the games. You have to put that work in. And just for anything, like, you have to master certain things. Like, if you play ball, you want to work on your dribbling skills. You want to work on your handling. It's the same thing. You find two pairs that you like to trade, like AU, GJ. Then you find two formations that really align with you: head and shoulders, inverse head and shoulders, flag poles, cup handle. There's millions of them. But just find what works for you and master it. So, Ty, tell me what you want to give to the people, man.
I think that building on that point, you want to master your skills, you got to make sure, like Darren said, you put the work in. But you can't just talk about it, you have to be about it. So we need to make plans because actions without words, well, excuse me, words without action, they mean nothing. We're just preaching, you know. We want you guys to really take this info and go do something with it. So what I want you guys to do is I want you guys to make a very detailed plan. All of the things that Darren just mentioned. What are the two pairs that you want? Write it down. Don't type it. Don't write it on your computer. Don't write it on your phone. Get a pen and some paper and write it out manually, physically. Then go to the next part. What are the two formations that you like to trade? Whatever it is, find it, find what works for you, fine tune it, and focus on that. And then I want you guys to focus on your back testing because that's where you build your skills, like Darren was talking about. How a ball player will build their dribbling, their shooting, their passing ability in the gym and trading. You want to focus on that list that you just made. How can you get better at those two setups? What kind of scenarios in the market lead to you performing the best when it comes to that setup, and what leads to you performing at your worst when it comes to that? Figure out what works and what doesn't. Do more of what does, less of what doesn't, and keep grinding every day. That's another thing. Never think that you just got everything figured out. If you have a good day in the market, keep grinding and keep going because what you did today doesn't matter tomorrow. Tomorrow is a brand new day in the trading market, and the market is unforgiving. If you come in there with a bad trade, the market is going to spank you and hand you a loss real quick every time. So, in order to stay on point and make sure that you're on top of your game, you have to continuously practice, continuously work, continuously figure out ways to get better as a trader. So, make sure you get your screen time in. You're looking at your pairs, you're analyzing them, you're reading, learning, and of course, tuning in every Tuesday and Thursday to the Bison Trading Show so that you can get more knowledge and gain more experience as a trader. So thank you so much, you guys, for tuning in tonight. It's been a great show, and we appreciate you a whole lot.
All right. There you have it, guys. We appreciate it. And I hope you guys take something out of this class, man, and just look forward to just getting more knowledge every week and learning new things when you come to the Bison Trading Show. So, with that being said, please tell a friend, tell another friend to tell your mom, to tell your granny. Please hit that follow button, man. Tell them to come Tuesday and Thursday. We're going to be here. We're not going nowhere. We just going up and we going harder every day, every week, every class. We're gonna try to turn it up even more. So you can definitely always hit me on my personal IG at I'm the D guy at IMDGUY or my business IG at Pearl underscore financial underscore LLC. Please drop a comment, drop a question. I enjoy it all. No question is a dumb question because listen, man, a dumb question is a question that you don't answer and you continuously don't know it. That's a dumb question. So definitely, man, ask us a question, man. We here for y'all. You can definitely hit my boy Tiberius at his links at.
You can make sure that you follow me on both YouTube and Instagram under the name Ty Trades Futures. Also, make sure you follow our YouTube page for the show, Bison Trading Show. We have some good content over there, and we want to make sure that you guys catch up on all of that in addition to what we have on Twitch. So make sure you slide through over there.
All right. There you have it, guys. Um, Definitely, man. Next week we gonna be live tomorrow. I won't be, unfortunately. I don't know if Tiberius is with his Wi-Fi and his technical difficulty been having. I don't know if tomorrow is on. We're gonna see how it plays. I have to do some things tomorrow in the morning, so I won't be, unfortunately, to be here to do it. But I know for sure next week. I looked at my schedule. I think we are going to be live. So we're going to definitely post on our page and give you the information what we're going to do tomorrow. If not, we're definitely going to be here same time, same place next week, 9:30. Check us out. So with that said, man, we're going to bow out of here gracefully. Ty, take us out of here, man.
All right, good people. We'll see you. Well, I'll see you tomorrow morning, Friday, 9:10 a.m. Catch you there. Be there or be square. We will be breaking down some pretty good pairs, so make sure you tune in. But until then, trade well. Have a good night. Be safe out there.
All right, man. Bow.